I'm one of the best traders ever.
Borsellino had his best single trading day ever in 1987, $1.4 million.
That's the mentality of the floor trader.
I'm executing orders for Goldman Sachs, Salomon Brothers, EF Hutton, Smith Barney, Merrill Lynch. I actually was going to go to law school. And then 2 days after I graduated college, my dad was murdered.
28 years old making 4 million, because bear in mind that's 4 million at that time. Essentially it would be like almost 16 to 20 million.
The first year I made $4 million, I spent $2 million on booze and girls. Second $2 million, I just blew it foolishly.
You went from going nearly thinking about quitting to then having 10% of the volume of the S&P.
So I walk in on that Tuesday afternoon, I make like 200,000, 300 grand. Wednesday morning, I do the same thing. Thursday morning is the famous trade. I walk into the pit and the market opens up. I'm long 300 S&P and the market's not moving like 5, 10, 15. It's moving 300, 500, 1,000. I got 300 contracts on. I handed my cards to my clerk. She came back like 15 minutes later. She goes, I think you made $1.5 million. What? She goes, you made $1.5 million. I just literally walked out of the pit, went in the bathroom and threw up. Literally in 13 seconds.
When you're a floor trader, your opinions don't last more than seconds.
The key to trading is literally
The number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Welcome everyone back to the Words of Rizdom podcast, still the number one podcast in the trading space and the fastest growing thanks to all of you and our incredible guests. Talking of which, we are joined by a 40-year plus trading veteran today. It's a complete honor. He was once 10% of the S&P volume in the trading pits, which is absolutely incredible. And I had a very great opportunity to research him and just watch some of the old interviews that he's done. And I'm truly honored to be with Lewis Borsellino. I hope did I say that right?
Yeah, you said it properly.
Perfect. Well, it's an absolute honor to be here with you today. And I'm excited to learn more about your journey and all the experience that you've gathered over the years and the decades of experience. But just to start off with, like, what was it about trading? Like, how did you find and come across trading?
Yeah, so that's a pretty interesting story. I actually was going to go to law school. I wanted to be a lawyer. Graduated college. And then 2 days after I graduated college, my dad was murdered. And I ended up driving a truck. After we buried him, he had a small trucking company. I was driving a truck. I was taking the LSATs, going to try to pursue my dream to become a lawyer. And I ended up, was reading the Wall Street Journal about gold futures and how gold futures had risen and the price of gold had risen. Ironically, not even ironically, it was fortuitous for me. My mother actually was a legal secretary to a gentleman named Maury Kravitz. And Maury Kravitz's partner was Leo Melamed. So you got Maury Kravitz and Leo Melamed. And Maury was probably the foremost authority in the world on gold. He went around the exchange floor before gold was even able to trade and asked all the different brokerage firms, can I get your gold business if you ever start trading gold? And everybody just said, sure, because no one ever thought that would happen again. So my mom was their legal secretary. They had left to go to the exchange. Meanwhile, there was a young attorney out of Notre Dame Law School by the name of Jack Sander. And my mom had gotten him, was typing briefs for him and doing different things and chores. And he went to the Merc. So after my dad died, I went to, I was actually playing handball, right? So handball is a little different than racquetball, but back then we used to play handball. We didn't have rackets. And I was playing with a gentleman named Lou Matta, and he had a small trading firm on the floor of the CME. And I told him I wanted to open an account to trade gold futures. And he said, Lewis, you don't want to do that. He goes, why don't you come down here and see what this is about? You're a young kid. This is the place to be. And so the first day I walked on the floor of the exchange and I opened that door, and the energy and the emotion and the sound of money was in the air, right? The people were just yelling and screaming and running back and forth with all these paper orders. And I was sold that day, and I took a job with him being a runner. So that's how I actually got to the floor.
Wow. And it's interesting how you say, like, especially when I speak to a lot of people with your sort of experience, a lot of the time it wasn't something that they had on their radar originally when it comes to trading. And they somehow, whether it's through meeting someone else, some little interest here, then suddenly they find themselves on a floor, and it's, as they always say, the energy that really drew them in.
Yeah. Yeah, it's and luckily, right, in anybody's career, you got your your hard work, dedication, things that you do to hone your skills. But in anybody's life, a little bit of luck has to come in, right? And so I went to the Merck. I was lucky of a couple things. Number one, Chicago futures was the king of the world. I mean, literally the New York COMEX and New York IMX, those exchanges traded commodities, but they were like little babies when it came to the New York or the Chicago Commodity Exchange. Like you had the Chicago Board of Trade, we had and the Chicago Mercantile Exchange, two biggest exchanges in the world. And when they started offering financial futures, the growth of commodity trading worldwide was incredible. Still a small game. Back in the 80s, you think about it, there was probably back in the 80s, there was like 450,000 people in the United States owned and traded stocks. Commodity traders were like 40,000. So it still was a neophyte industry, but I got there right at the right time in the 80s and the explosion of all the financial futures. But meanwhile, as I was a runner, I went to the gold pit with an order, and I knew Maury. I knew Maury since the time I was 8 years old. I mean, he was just a fixture in our family. So I tapped him on the shoulder and gave him an order, and he goes, "Hey, kid, what are you doing here?" He talked like this. He was a jovial guy. He was like 5'5". At one time, he was 5'5" by 5'5". In fact, his badge was ZZZZ because when he was talking to you, sometimes he would fall asleep. So, but he goes, "Hey, kid, what are you doing here?" I go, "Well, I got a job as a runner." He goes, "Come back in 2 weeks and you're going to be my clerk." And that was you think about the things that fell into my life. Like, I was on my dad's death was certainly a devastating time for me and my family.
Yeah.
I always was trying to pursue my career as a lawyer, and God shuts down one door and another one opened, right?
Yeah.
And so that's how I got started on the floor of the exchange. I mean, I literally went to college. I was an economics, political science major. So, not that you could use anything like that on the floor. So, in fact, one of my economic professors, visiting the floor one day, they tapped me on the shoulder, and he was out there, and I looked at him. I go, "Hey, professor, this is economics 101 in here, and there's no widgets. We're not making widgets. We're making money." But
I love that.
yeah, it was just a lucky time. Not a lucky time. Well, it was luck that the opportunity came to me.
Mm-hmm.
And then I was able to take advantage of it. But the growth of the exchanges was massive over the next 20 years.
Definitely. And just to touch on a topic there, like my father actually passed away and was murdered when I was younger too.
Yeah.
And watching this documentary that you had on your story,
Yeah.
your mother mentioned that when that happened, yourself and your brother said to her that, we're gonna basically get revenge with success. Like we're going to become successful as our way of getting back at that situation. How much did that help you in terms of your mindset going into, I know at the time maybe the exchange wasn't there or like the trading route, but just generally your mindset of pursuing success and elevating yourself. How much did that help you in your journey?
This is a very interesting question because on reflection, when I wrote a couple books and I reflect upon my life and I look at different things, I grew up not in a very traditional family, right? Everybody's seen these Italian mob movies and things like that. Those kind of people were normal for me. Like that was our life. That our friends were our friends. They all did the same thing. All the guys did the same thing, hung out together, Italian community. But, when my dad went away to jail when I was in like fourth grade and came home for a little while, I was in seventh grade, won an appeal when I came back. So 6 years of my life growing up, my father was gone and he was like my best friend. And my brother's best friend, and even though he lived this sort of deviant lifestyle, it wasn't the traditional American family lifestyle. He did have his principles and morals that he kind of passed down to us. And one of the things I look at is that I've been dealing with controversy since I've been in fourth grade.
Yeah.
Right. So my point, what I learned in a very early, very early in my life, you learn, move forward. Just keep going. You can't dwell on the past. You can only take what life's given you. And, you hear those things from life coaches and all these people out there pretending to be life coaches nowadays. And it's funny because when I was on the floor and trading and the world was turning into chaos, like the crash of 87, like, when the markets were in fast markets and things were, making the markets gyrate. International news. I mean, we didn't have, in the 80s, we didn't have the internet that was, democratization of information, right? Where it was instantaneously. Like when we closed our trading days out, if we weren't flat, there were no overnight markets. And if there was a bombing, a war started, something happened, you couldn't get out of those positions until the market opened up. But so my point is that when you deal with controversy as young as I did, and then you go through all the things that happened with my dad's murder, it was just like, what can you be in your life? Well, being a trader, right, is probably a good idea because you know how to kind of harvest your emotions. You know how to make sense of what's not sensible, and if you can keep your cool when everybody else is panicking, it becomes a very great personality for making sound decisions.
Definitely. That's why I wanted to ask you, because it's a very similar thing of handling those emotions, being able to handle setbacks and adversity, which, as you say, like, we're not, as traders, it's not something that we're not used to. Like, the everyday person, when it comes to trading, just does not understand. We're not designed as human beings to be traders. I think it's something that you have to develop. Sometimes there's certain circumstances that help you to develop that as well. And as you said as well, that there was moments where you could say luck, you could say maybe your mindset that allowed you to get into those positions too, and how you molded yourself into those positions that also allowed that luck to take place, if you will, and those doors to open. But you mentioned being a runner. What does that mean? Like, what would that entail, that starting position?
Yeah, so on the floor of the exchange,
let's take a break for a minute there, guys, because I want to tell you about one of our sponsors, Alpha Capital. Now, without our sponsors, it's not possible for us to host such incredible podcasts around the world and get the level of guests that we are getting. So again, thanks to Alpha Capital for sponsoring the podcast. Now, Alpha Capital is one of the best prop firms in the industry. So far, this year alone, they have done over $50 million in payouts, which is absolutely incredible. They have the very best infrastructure in place for longevity, from an in-house broker so they can offer the very best trading conditions and platforms that all traders love to use. They're still able to offer services to the US as well, so the US traders can still trade with them on particular platforms. They have institutional experience, so they know how to manage a prop firm correctly and have such an incredible team on hand, on top of which they have both a pro and swing plan. So depending on your style and strategy, you can choose which one is best for you. Now, you can use and get the highest discount available at anywhere using Riz25. So that's RIZ25 for 25% off all challenges. The link's in the description below. So let's get back to the episode.
They were different pits, so we call them trading octagons or trading pits. So there'd be the pork belly pit, the cattle pit, there would be the Eurodollar pit, the Japanese and Deermark. So every pit was named. And so what would happen was that all the brokerage firms like Merrill Lynch, Goldman Sachs, Smith Barney, EF Hutton, local firms would have desks, and clients would call down to the desk on the floor to a clerk and say, hey, go buy 20 contracts of S&P futures at the market, all right? And they would write it on a piece of paper, they would fold it, and then that runner would run it out to the designated pit where the order was supposed to be at. And so that was like your first introduction to, you were part of that. You were part of that chain that got the orders to the exchange, to the broker who was going to execute the order.
And what was the elevation like from there then? Because obviously you were started as a runner, then you said you went to being a clerk, and then from there, eventually you obviously ended up in the pit trading itself, right?
Yeah, so hopefully when we become a runner, the next thing is, how do I make friends with a broker? And can I get a broker who will hire me as a clerk? So if I'm a clerk, all those runners that are coming with the different orders coming to my pit, I grab those orders from them, and then I organize them into what we call the deck. And the deck is simply all the orders that were going. So you got your market price, and then you have all the orders that are below the market price, and then you have your market price and all the orders that are above it. So you would then organize all those orders, and then you put it in the deck, and as the market moved up and down, the broker would execute those orders.
Okay.
So on the upside of a deck, you had what we called sells. So if the market was at 10 and you were trying to sell them at 12, I would have sell orders resting in the pit, and when it got to the 12 strike price, I'd be offering 10 at 12, 10 at 12, 10 at 12. The other thing that was above the market price was what we call buy stops, and buy stops are orders that are put in above the market. So let's just say you're short the market at 10, and you only want to risk $5 on the trade, so you put a buy stop in at 15. So if the market doesn't go lower because you're in pit, that's why you shorted it, and it starts going up, you only wanted to risk that $5, so the buy stop would be above the market, and so then the broker would execute it, and that would be locking in a loss of $5 on that trade. So on the downside, you had your buys and your sell stops. So as the market moved in descending order, you would execute all the buys, and then let's say you were long the market at $10, and you wanted to risk $5. You would put a sell stop at $5. So if the market moved from 10 down to 5, the broker would execute the order, and then you've locked in your loss. So that's the way, very simple in a deck and order flow. It's no different than all the electronic domes that you see now.
It was just back then it was all collected into paper, yeah.
Yeah, paper.
How much room for error must there have been though with all this paper, from the desk getting the orders to the runner sending it to the pit? It's all on paper, all these transactions.
Yeah, there's all kinds. That's an interesting story there. I mean, there's all kinds of different errors. Like, for example, the phone clerk could have taken the order, and the guy said buy 20, and he wrote it down as a sell, right? So that error can happen. The clerk could bring it to the wrong pit, and then they can't execute it in that pit. They got to finally get it back to the other one, and then the runner gets it to the pit, and the guy will put it into the deck, and the broker could execute it wrongly. What if he had a buy and he did the sell? So that's the communication errors that could happen. But actual in the pit, when you were trading and you were standing with a bunch of people, everybody had different symbols. My symbol was LBJ, because I grew up in the 60s, and LBJ, my initials were Lewis John Borsellino, LJB. But you want sort of initials or acronyms that people are going to remember. So I had LBJ because of the president. So everybody kind of knew who Lyndon Baines Johnson was, but I used that as my acronym, LBJ. And there was other people who have POW and WOW and ZAP and Hulk and MMM and ZZZ and HAT. There were a lot of different, like ACE. There were a lot of different, symbols. So now you're in the pit, and you're trying to buy from, let's say you're standing across from me, and I go, you're offering 10 at 10, and I go buy 10, and the guy next to you is offering 10 at 10, and he thinks I traded with him, right? So you both check the trade with me, but me and you are looking at each other, checking the trade. But it's still the hand signals were the same as, hey, I bought 10, I'm writing it down, I sold you, and you go, I sold you 10, right? I didn't realize the guy next to him was thinking that I was communicating with him. So the next day, now you have an out trade. So I've got a client who thinks he bought the market at 10, all right, which he did. Well, I executed the trade with you, and the next day, this broker to your right, my left, is out to sell me 10 at 10, and I don't know it, right? Well, imagine if the market is at $15 and moved up overnight, and he's looking for his buys at 10, right? Well, I got the buys at 10. This guy's out to sell me 10 at 10, and the market's at 15. We don't know it. That's a winning out trade. We would say to him, I would say, I didn't know it, so let's just split it. I take 5 and you get rid of 5, and we make $5 together. Oh. But let's just say the market was at 10 and it opens up at 5, and that broker that I did not trade with is out to sell me 10 at 10. Now we got a losing out trade, right? And that's when all the arguments start.
I can imagine.
Yeah. Whose fault was it? I was your fault, my fault, no fault, so, the general, when you have 500 people standing in the busiest pit in the world and the market is moving, a matter of seconds and milliseconds every day, it's something, outtrades were just a part of the game.
I can imagine. In terms of personality, though, because as you mentioned, like you're having these same mistakes, you have to handle those, you have to work out who was at fault, who wasn't. You're probably having to fight your case to try and make it so that it wasn't your fault, etc. But just generally trading within those pits and that environment, as you said, just the day that door opened and all that energy's there. How important is it having a certain personality to be able to handle the pressure, the emotions, and the chaos, if you will, of the floor?
Well, it looks like chaos to the outside world, but it's really organized chaos, right? Everything had but two different mindsets, right? If you were a kind of person that knew that you weren't very good at trading, so you could have a job just executing orders and making brokerage commissions from the brokerage firm from executing their orders and assuming that risk of executing the orders, and there could be out trades, right? When I was recruiting traders that worked for me and we were backing them, I used to look for people that were, I don't want to say this negatively, but less cerebral, but more about discipline. So Division I athletes, college athletes, people like that, because they knew what it took to have the discipline to train their body. Now I just had to teach them how to train their mind when it comes to trading, right? So, for example, you got to be able to trade with a stop. Like I said, if you've got a plan, I want to buy it at 10. If it goes up to 15, I want to get out. If it goes down to 5, I need to get out. Well, a lot of times what happens is that people freeze. They put a position on, I always used to have a little saying that's, how do you turn a day trader into a scalper or how do you turn a day trader into a position trader, right? Let the market go against him, right? So if he buys them at 10, he thinks, well, I love him at 10, let me buy him at 8. And he loves him at 8, he goes, let me buy him at 6. And then all of a sudden they're down to 2 and he's lost all his money and he's got to puke out of his position and the market turns around and goes the other way, right? Yeah. So, that was a story that happened all the time, right? People just they lost their discipline. And if you lose your discipline, I used to have this little saying, if you lose your discipline, your ass is going to follow, right? And one of my rules was don't shoot the whole wad in one day. You always want to be able to come back and trade the next day. So when it came to trading, different mindset. You got to be the kind of guy or person who can make a decision, stick to the plan. If it goes against you, take your loss and go on to the next trade. And, it's all kind of cliche now because everybody says the same thing. But back in 1980, when I wrote the 10 rules of trading, the rules I wrote were, hey, learn from your losers. You'll learn more from your losers than you do from your winners, right? So you got to be able to take rejection. Think about the fact when you're wrong, the market's rejecting you, saying you literally have not made a good decision. It's turned into a loss. So what happens a lot when I was back in traders is that they would get paralyzed. They make 5 losing trades in a row. They become toast. If they become toast, they're never going to be a good trader. If they can't put the past behind them and move on, then they're going to be paralyzed by their decisions they made in the past, right?
Did you ever have to coach people into that sort of mindset, or was it something that you would try and find naturally and then work, build on that versus trying to help people accelerate their learning curve of trading?
So when we had Borsellino trading, what we did is that we had 3 analysts that we paid to do all the market research, right? We had some people that were GAN experts. We had some people that were reversal experts. Then we, had people who were technical analysis experts. And there was like 10 of us that would sit in a room. And then we would call the analysts in, and they would give us their prediction for the market for that day. We did this every day, and so we all had where it was a buy, where it was a sell, what we think the market's going to do, what numbers are coming out today. We got unemployment, CPI, whatever could affect the market. That was their analysts' jobs, right? And they would come in independently, and so what we were looking for was consensus. with the 3 different analysts with 3 different disciplines, right? So then we would then internalize that. Well, now out of those 10 traders, right, maybe 3 of them were really good. Maybe 3 of them were average. Maybe 3 of them were terrible. But at the end of the 6 months, we knew the terrible guys and we washed them out and we brought in new guys. But at the end of the day, you know, those are kind of things that, you know, people think that, you know, people don't understand that when you're trading, especially you're talking to your retail people, they really are, you know, they're lost. You know, they want to learn how to become a technician. They want to become an analyst. They want to learn and so on. So it's kind of hard for somebody to do that part-time, right? This is something that you know, dedicate your life to. It's 24/7 about information. So, so if you're not the kind of person that can make some losing trades and move on, you're not going to be very good at trading.
Yeah. Was that something that you learned very quickly when coming into trading?
For sure. I mean, you know, I used to, it was the best business in the world. It was instant gratification. You made a trade from you made $1,000. It was in your account the next day.
Wow.
Right. And then when you lost for the day, it was out of your account the next day. So instant loss, you know, I used to call it, you know, it was like a 1 minute, every trade was like a 1 minute business plan.
Yeah.
But yeah, I mean, and scalpers and traders that are just trying to take advantage of the market fluctuations for the day are completely different than, you know, people that are, you know, creating hedge funds and creating, you know, ETFs or UITs or anything that has to do with the market. But certainly when the S&P 500 was created, it took a while for all the fund managers to understand how to use it. And so in the beginning, it was terribly inefficient. And by the time I left, it was very efficient. So
what were the pros and cons of that, though? Because a lot of people would hear inefficient and think, oh, that's no good. You know, can't use that. But then there would also be some pros to that, I imagine, especially being in the pit.
The pros were when it was inefficient, the guys on the floor made a ton of money for us. But the cons were, there really weren't any cons. I mean, it's just people learning by their mistakes. And, you know, then, you know, hedge fund managers, let's just assume they were doing a SP, you know, a SPOO or S&P 500 index. And they were long all the stocks, and the market's up 6% in the first quarter. And they're worried about the second quarter. They could literally go into the futures market, sell their position out, be short futures, long the stocks, and be market neutral, right? So things like that started evolving, where fund managers were using it professionally, right? And when you're on the floor and you're a retail trader in this space, you're really just providing liquidity for the institutional guys to execute their orders. And what happens is that when they have a big order, they throw the market out of equilibrium. And so let's just say, you know, they come in and they buy 1,000 lot and they move the market from $10 to $17. The guys that short against that institutional guys are hoping the market will move back to around, you know, back to $10 because that was equilibrium at the point. So those are the kind of traders that are, you know, providing liquidity for the institutional traders. So you got to remember that you're trading against the institutional traders who have long-term goals and different strategies applied in the market.
I always find it fascinating when speaking to more professional traders and people who have that wealth of experience, because you hear about more so different roles in terms of having analysis, having then the trader, having the, say, risk department, etc., versus the average retail trader is trying to fulfill all those roles in one.
Yeah.
And then, as you mentioned as well, a lot of the time, you have to dedicate your life to it. You have to be full-time, essentially, to really build these skill sets. And I think that's where it's really interesting, because most traders are always rushing. Retail traders are always trying to rush this to become a successful trader, to have freedom, etc. And I do believe there's a very big misconception when it comes to trading, because yes, it can grant you freedom, you can live life on your terms, etc. Cool, but that freedom doesn't look like you wake up and just do whatever you want all day. You still, the discipline of what trading requires to present that life is you essentially replace your job, wherever that may be, with the job of trading, which, if anything, could probably be more stressful, be more heartache because of the ups and downs that comes with it. But at the end of the day, for those who are dedicated, the reward is there. But it's understanding that it's going to take a lot. Like when you hear of, say, traders trying to become a professional full-time trader, I say professional, but full-time retail trader within the space of 12 to 24 months, for example, like what does that make you think, having all the experience that you have and have seen the space grow and evolve in the way it has over the years as well?
Profitable trading really boils down to two things: opportunity and volatility. And that is why the podcast has partnered with Market Journal. Because between the years 2016 and 2020, the amount of opportunity that was available, as well as volatility to take advantage of, was at the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, all it took was one tweet, and that would present so much volatility, and the right traders would take advantage of that and would create their record P&Ls. And that is why those same traders are so excited for this new period between 2025 to 2029, when we have President Donald Trump back in office. Now, Market Journal is going to give you the weekly insights you need across crypto, Forex, futures, and the stock market. So regardless of what happens, whether it's a tweet, a particular stock running up hundreds of percent, whatever volatility and opportunity that Market Journal can identify, it is going to share with you every single week. So you can purely focus on taking advantage of those opportunities and taking advantage of that volatility to create your record P&L. Now, Market Journal is absolutely free. All you do is click the link in the description below, put in your email, and you will receive key updates on the markets every single week. So you are always up to date with what's going on and ready to execute when the time is right. Links in the description below. Thank you for enjoying this episode.
I had two types of traders. I had floor traders and upstart traders. So it's the same thing. Literally, I had a rule of thumb. If I could get a trader to break even after 1 year, broke even, covered his commissions, he had a good chance of making it as a trader. Right? So meaning 1 year of being in the market, buying and selling every day, putting your losses in, putting your winners in, doing all your research, right? There's what we used to call it was ready, aim, fire. Ready was, let's do our research. Aim, okay, these are the targets we're looking for. Market gets there, fire, put the order in, right? And then at that point, then you manage the risk. Then you have to have a stop and so on. Mm-hmm. So you have to go through that process thousands of times before you become, number one, comfortable with it. Number two, to understand what it's going to take to turn out profits every day, right? I used to have a rule about guys that traded on the floor or traded upstairs, and they said I made money every day for a year. I go, show me a guy who makes money every day for a year, 2 years, 3 years, and that's the guy who's going to get indicted because he's got inside information, right? It's really about money management and going through that routine in, day out. And like I said, it's less cerebral. The research is cerebral, but at the end of the day, the execution part of it is just robotic, right? And this is, this used to be the big sort of argument between computerized traders and discretionary traders, right? And I used to look at the computerized traders and say, yeah, I got it. Until your program spits out like 10 non-profitable trades, and then you're in there optimizing, right? So my point is that whatever your philosophy ends up being, more computerized, more discretionary, you got to do that day in, day out, and hone your discipline to be able to stay with your systems, right? And that's a difficult situation, and things have changed dramatically from when I traded. I mean, we had all the information. When all the order flow was going to the exchange and then into a pit, we had all the information, right? So I always like to tell people, you got to understand that we were the original high-frequency traders. So literally what we would do is we'd be standing in the pit and we could see the order flows coming in. We try to get in front of the order flow, right? And you see all these brokers buying and the market's at 10, now it's at 12, now it's at 15. Well, let's just say I assumed, I saw the order flow coming in So I bought the 12s and I bought the 13s, and now the guy, the order fulfiller filling that institutional order is bid it up to 15. So I bought 20 contracts at between 12 and 13, and I turn around and say sold and sell them 20 at 15. Well, I make, literally a $3 and $2 profit on those exchanges. And if I could do that, 10, 15 times a day, I'm making myself $3,000 to $5,000 a day, And the other thing about retail traders is they're going to have to understand that where their risk tolerance is, right? There's some guys that can trade 1 and 2 lots, okay? And they make the best decisions ever. As soon as you kick them up to a 5 lot or a 10 lot and you increase that risk, their judgment gets skewed. And what happens is that the two things that you cannot measure about trading is that, everyone has a different propensity for greed, right? And risk. And so when the smaller trader steps up to be a bigger trader, can he handle that risk? Because now when he loses, he's not losing $200, he's losing $2,000, right? So that's another thing that retail traders need to learn, that that's going to be you got to understand. I used to call it, one of my rules was know yourself, know what you're comfortable with. Because if you try to get outside your comfort zone, you're going to make bad decisions.
Do you feel like everyone has a limit? Like there's just a certain limit that you can't train beyond, you can't read a certain book about or learn to get past? Like every human being just has a limit that their risk tolerance just gets too out of whack.
Yeah. So it's a real good litmus test is when you have a position on and you feel like you're going to throw up. Maybe it's too big.
Definitely.
Yeah, but there's different trading. I used to in the day I used to get compared to all these bank traders. They trade hundreds of $millions of. Yeah, well, they had the bank's money, and they had the book behind them, and they had all these different things. I was on the floor trading my own money against Goldman Sachs. Right? So it's a little different, right? When it comes to who's laying the risk out, and who has to assume that risk.
What do you think it was for yourself then to be able to handle that much risk?
Like I said, I was able to become Maury's clerk, and literally, I tell this story all the time. I was there for a year and a half, and I wasn't making any money. I was making money filling orders, but I wasn't making money trading. And then I would have an out trade, and I was getting very distraught thinking about leaving.
Wow.
And then I don't know how old you are, but do you remember the Falkland Islands? When the Falkland Islands, this would be like mid 80s, 1985 or so. I'm trying to think, maybe 83. So the Falkland Islands decided they were going to succeed from, or they got attacked by Grenada, and then they were going to succeed from the British Empire, and then they sent ships down there. Well, gold rallied like $60 in like 3 days because of the threat of a war, right? And then they made an announcement during the day that that the ships are turning around and they're going to surrender. There's not going to be a war. And then gold dropped like $80 in about 2 minutes. So I was filling orders in the gold pit at the time, and when you used to fill orders, you'd be in there, trade with 30, 40, 50 guys, and then the market's in a fast market. So that means the tape goes to fast, so the order flow is not coming out. And so what would happen is that I would fill orders with the different people, and I would write on the order who I did. I would just put the guy and the price and stick it in my pocket. So I did my pockets. Literally, I had probably 50 orders in each pocket, and my clerk had pocket. So now the market slows down, and I'm verifying all my trades with different people. The guy next to me, his name was Mike Manini. His badge was MMMM, and I look at him and I go, "Hey, I sold you, 25 contracts on the low." He shakes his head, and I go, "What do you mean?" He goes, "No, I sold you 25." So we had what we call a sell, and the market was 50. It went down to the low, And then it rallied back because they said they didn't surrender and the war is on. And so now him and I had what we called a sell.
Mm-hmm.
So the way we resolved it was he bought mine, I bought his. The market was already $50 higher, and I made $75,000 on that trade.
Wow.
He made $75,000 on that trade. Now the S&P Pit opens up. In that year, I've got like $100,000 in my account, and I got a year and a half of experience. I go in the S&P Pit, and now I'm killing it. Like I know what I'm doing. I'm not making mistakes. I started building a deck like we had in the gold pit. And then the S&P Pit just exploded.
Well, talking of exploded, then there was one point where you were responsible for 10% of the volume, if I'm not mistaken.
Yeah, that was for what I used to trade and my customers. So I was executing orders for Goldman Sachs, Salomon Brothers, EF Hutton, Smith Barney, Merrill Lynch. Maury and I put together a pretty big deck and all the big local firms. And at that point, I was, I had a client here in New York that was Salomon Brothers, and they were gigantic. And the guy here that was in charge of that company was he was a partner, was Stanley Shopcorn, and he loved the way I filled my orders. And so I got that, and then that went all the way to 1987, 86, and then 1986, the Merck literally outlawed dual trading in the S&P Pit. It was the only commodities future ever to outlaw dual trading.
Wow.
So I gave up the deck, and I just became a trader in 87.
Wow. But to think about that turn of events, though, we just go back. Like you went from nearly thinking about quitting, to then having 10% of the volume of the S&P that you were managing.
And like I said, think about retailer traders. They got to go through that process all the time, right? Well, what I was really, really comfortable with after a year and a half was buying, if I got an order to buy 1,000, I bought 1,000. If I got an order to sell 1,000, I sold 1,000, right? So I got really good at executing orders. So I was really good in the process of buying and selling.
Mm-hmm.
So it just became normal where I kind of disguised what I was buying and selling for myself in the order flow. That's another reason the bigger order firms, the bigger players in the like Salomon Brothers, Goldman, that they had traders that didn't want them to know it was them. So they would just say, Lewis, buy 1,000, give up yourself. So I would just say, it's me. And the next day we would have what they call an out trade, was just called a house out, where you make a switch of the clearing firms. Okay. But the fact that I was executing so many orders just made me very comfortable with numbers. Big numbers.
So would it be a case where in your mind you're focusing more on the buys and sells, the contracts, versus dollar amounts and profit amounts?
Yeah, it was all about making sure you're doing your buys, your sells, and making it executable, making it so that there wasn't a problem. So one of the things that I was attributed at the Merck that nobody liked in the beginning, but then everybody did it, was I had all this risk, right? And I'm trading with all these different people, and I'm getting orders coming in. And so sometimes it was really physically impossible, because what the rules of the exchange said was that I had to look at you, we had to acknowledge each other, we had to write down the 5 things on the trading card. Mm-hmm. So if I was the buyer, you were the seller, I would have the buy that said bought 10 from you. Let's say your badge was AKA, and then I put AKA, and then you say you're Merrill Lynch. I would put down the number 560 and the price. And then he'd have to put on your card, I sold 10 to LBJ. He's Goldman Sachs. Here's the price. And then we had what we call a bracket, was a time bracket. Like every 15 minutes, there was a time bracket. Those are the was it 1, 2, 3, 4, 5 things that had to go on a trading card, right? And we had to acknowledge this together. Well, can you imagine when the market's moving, fast markets, I don't have that much time. Mm-hmm. All I could say is I bought 10, price, that's it. So I would take it and put it in my pocket. What I did with them was I hired a clerk to go around and double check all my trades, so I didn't have out trades.
Yeah.
And then, some guys fought it to the end and say, my clerk would go to check the trade, and they would, don't bother me. He should be checking the trade with me, And and then I would go up to the guys, listen, if you don't check the trades with my guys and we ever have an out trade, you're going to eat it, not me. 6 months later, everybody had an out trade. I created a whole new job on the floor, out trade clerk that verified trades. So that did a lot to, excuse me, that did a lot to literally keep out trades to a minimum, because you could find right during the day, right? You didn't have to wait till the next day and some catastrophic event happening, and that would, could literally change your trading career. I mean, there were some gigantic out trades, like in the millions of dollars, while I was down there.
I can imagine. I can only imagine. So then you've helped to sort of try and remedy that by creating a role which would then verify in the moment on the day, versus just leaving it.
Everybody did it then. Literally, I would say within 6 months, everybody had a trade checker.
Wow. It's necessary though, as you said, that once you're trading that sort of size, and as you say, the markets are moving so fast, trying to note down all those things yourself while trying to continue to trade.
And that trade checker became an extension of you. And if you had a good one and the other guys had good ones, they knew each other. They literally knew, hey, I got a 10 lot with Lewis. Boom, 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 boom. They would reconcile it.
How important would be like maintaining good relationships be as part of pit trading?
With the who?
As part of pit trading, like maintaining those relationships, because you're trading with each other every single day.
Yeah. When I was filling orders, I never would try to lay away what we call local, right? So if I had a big order and I started bidding the market up, let's say I had a couple thousand to buy, and you hit me like on a 10 lot, I would ignore you. And then I would just shake my head. I don't want you to sell me a 10 lot and then I'm going to race the market up another 200 points.
Yeah.
So we had this like symbiotic relationship with everybody in the pit, right? Our goal was to provide liquidity for the institutional traders, and we did, and hopefully we could make some, like I said, provide liquidity and then make some money off of the institutional orders that came into the pit. Of course, personalities are what they are, and so there were some people you got along with better than others, but mostly people respected each other. We respected for what we did, and we were all there trying to make money. We weren't trying to, hurt anybody. You shouldn't try to hurt anybody.
So in terms of maintaining those relationships, were there ever moments where things do get heated and things get a bit out of control, I can imagine?
Are you asking that because you already know this?
I've heard rumors. I've heard rumors of you had not only for the 10% of the S&P and obviously being a phenomenal trader, but also having a reputation on the floor.
Yeah, I did. I not something I'm proud of, but I did have the most fines on the floor for what they called undue force. So, being the bigger, one of the biggest traders in the pit, I would turn markets sometimes, right? And I would go, half bid, 70 bid, 80 bid. And if you make those bids and people are offering them, and now there's 500 people in the pit, you should get all those contracts. Well, there were what I used to call the bottom feeders, the shark feed. They used to, I would turn the market thinking the market's going higher. A lot of people used to follow me, right? So, and I see somebody sell this guy a 5 lot. When I turned the market, to me, that was not right. So I would go up to that person and strongly suggest that they don't ever do that to me again. Right? Yeah, there were times where, other people got in fights and pushing and shoving. The number one thing was where you could stand, because the higher, more elevation you had in the pit, you had better line of sight. People were always jostling for, places to stand. People get there like 5:30 in the morning, the market's open, and have a card and standing on the floor in their spot so they could have that spot. So it was very physical, very, it's all about sight and being seen. And yes, I did have a lot of different fines for that. But, that came with part of the territory, being the bigger trader and so on. But it's funny because I would be playing golf with guys sometimes, and the guy go, what do you do? I go, I trade S&Ps on the floor. Like, so-and-so? I go, yeah, I know him. He stands in the pit with me. And the guy I was playing golf with would meet the trader and say, hey, I met this guy. He's the nicest guy in the world. This guy, Lewis Borsellino. And he goes, what? He goes, you met Lewis? He goes, you met Joey. Joey's my brother. He goes, no, I met Lewis. He played golf with him. What a great guy. He goes, well, you shouldn't be standing in the pit with him.
Yeah, but then that's what the job demands, I guess.
Yeah, look, I wasn't there to make friends. I was there to make money, right? And so, there was a unwritten law, and it was funny because like the smaller traders gave respect to the bigger traders and would allow them. So like there were times that I'd take 100 lot down from somebody, and there'd be like 3 or 4 guys around me. Say, Lewis, can I have 2? Can I have 5? Can I have 3? And I would go, yeah. Don't worry about it, and I would give it to him, But there be definitely a hierarchy in the trading world. I mean, 1, how much volume were you doing? 2, how good were you? People respected you. One of the things they had to know was that if I made a trade with you, it was good, meaning I wasn't going to back out of trade. I mean, in the early days before they had what we call dupe cards, there were guys sometimes would make a trade with you in the pit, and if it went their way, they just ripped the card up and say, I never traded with you, right?
Wow.
So, but you weed those people out, I'll tell you what, think about this. Hundreds of billions of dollars was trading hands every day, okay, without a lawyer, right? It was a handshake. Your word is your bond. You make your trade and you go from there, right? So
I love what you're saying there because it really gives an insight into what I would imagine most people don't really understand. Like we look at old videos of the pits, we see the as we would say chaos, and we'd say, oh wow, that must be absolutely insane to be part of. Absolutely, also incredible in ways too. But as you already suggested, it's more organized chaos, especially when you're involved, right? There's an order to things. But then we get to learn about the hierarchy. We get to learn about the levels of respect that traders will have with each other. Also, the people who may try and cut corners. The deeper levels that us as retail traders really wouldn't see behind the curtain. But it's really insightful to learn about.
yeah, so think about how efficient it was, right? And here's the things that if I can put it in a little point of reference for you. So let's say you run a business, okay? And you're doing business with this guy over here, and you're making a good profit with that as a customer. And somebody goes in there and undercuts you and takes that customer away. You're angry at that spot, but you go, well, that's part of doing business. And then when you really get angry is when you see what it does to your P&L a month or 2 months from then. When you're on the floor and somebody misses you on a trade and you can't get out or get in, right away, hey, that you missing me on that trade cost me $10,000 immediately. So it's in loss and instant gratification. With that kind of a high stake pressure on people, it didn't bring the best out of people all the time, right? At the end of the day, money is the root of all evils, right?
Yeah.
So it's different, right? So I've started several businesses and done a lot of things, but the things that really bother you in business end up affecting your bottom line a month or 2 months from now. In trading, it's right there. I mean, you're looking at that person, and the person just cost you $10,000. So it's a different, especially floor trading.
Definitely.
Retail trading, you're going to get mad at the orders, the screen. You're
Yeah.
It's going to be either your order entry system didn't work. I put the order in. You're going to get mad, right? And then you're going to miss a trade, and then you're going to run the risk of over trading, right? I used to have a bunch of different rules about over trading and trading, But it's you'll find out, because if you're trying to leave your business, right? Here's another analogy I used to make. So let's say you work for somebody and you're making $50 an hour, okay? And you work all week, you work all 2 weeks, and then you get your paycheck, right? Well, let's just assume the business, they didn't make any profit for that month, right? But you still got your paycheck, right? So that risk is on the owner of the business. So think about trading. I used to tell people, this is the only thing that you could work all month and not have any profits, right? That becomes, like, I was fortunate because I was a floor trader. I think over from 1981 to 2003, maybe had 2 or 3 losing months, right? And then, there were times where I would, maybe go for 3 or 4 days where I'd be making money, and I'd wake up in the middle of the night, in cold sweat going, I lost it. But, those are the kind of things that, that happen. I mean, because literally you are your business. I mean, in my height, when I was trading the most, I was making a couple $1 million a year, and I had 1 employee. I had 2 employees. I've started businesses where I've had 800 employees.
Wow.
Right. So, different risk, different mindset, and it's different sets of pressure.
In terms of the trading side, when you mentioned that you went from, say, having that losing period where you thought about quitting, and then obviously you started to really perform well,
Yeah.
and started to really believe in yourself and what your capabilities were as a trader, especially in the pits. What was your mindset like, though, as you started, through that process, in terms of your mindset being like, were you confident in yourself, or were you just kind of going with the motions, or were you confident that, okay, I've got this now? Because as you just mentioned there were moments where you might have not made money for a few days, and then suddenly you think, okay, I've lost it.
Yeah.
Well, tell us about that sort of roller coaster of the mindset in trading.
Let's take a break for a minute there, guys, because I want to tell you about the best trading tool on the market, TradeZeller. The reason why TradeZeller is the #1 trading tool that every trader needs is because you can do backtesting, automated journaling, trade replay, in-depth analytics, and so much more. And the greatest part about TradeZeller is that it's all automated. All you have to do is connect your MT4 and MT5. It will pull all your data onto the dashboard. You can add playbooks. You can just add notes. You can add images from your trades, and you can get the insights that is necessary for you to progress as a trader. Now, TradeZeller is for absolutely everyone. Whether you're a crypto trader, whether you're a Forex trader, whether you trade prop firms, it is for absolutely everyone. And that is why thousands of traders have signed up using my link here through the podcast. Make sure you use the code RIZ10 for 10% off your monthly subscription, or WOR for 20% off your yearly subscription. The link is in the description below. And let's get back to the episode.
Yeah. So, it's like I said, it's instant loss, instant gratification. There's no better feeling than making a great trade.
Mm-hmm.
No better feeling. I don't care what people tell you. Right. And there's no better feeling of the independence of being a trader. Right. I mean, between my wife and I raised 7 kids.
Wow.
I was the football coach, the baseball coach. I was that. I mean, it gave us a freedom, 2 vacations a year, Aspen skiing, doing all those things, private jets. And my kids, grew up in a life that was, second to none, But that mindset, once you got it, it's like, it's a big ego.
Mm-hmm.
And you got it. And I also said one of my rules was, if you lose, if you lose your head, your ass will foul, right?
Mm-hmm.
So that's one of the things that the market's the only thing that humbles everybody.
Yeah.
Right. It was funny because we could have kids who basically barely got out of high school making $1 million a year because they got into the pit, they learned how to put themselves in a good position, and they were able to scalp back and forth every day. Right. Then I had guys that were Harvard MBAs standing in the pit that struggled with it because they were taught to be more opinionated. Like, I think this is where the market's going to go. I'm going to buy it here. I'm going to get out here. And like I said before, 2 things you cannot chart: fear and greed. Everybody has different fear and greed. Mm-hmm. So once you have that swagger and you're in the environment. I originally started out, I'm going to make $500 a day. Then I went to, I'm going to make $1,000 a day. Then I went to $2,500 a day. And then it was, I'm going to make as much as I can in a day, right? And, my typical, my typical ritual was I traded in the morning to about 10:30 Central Time, opening to about 2 hours, and came back in the afternoon. Because the market tended in the middle to just kind of float, right? So that was my typical thing. And then towards my end of my career, my goal was to make 5,000 a day. If I made 5,000, I left. But it's in 1987 in the crash, I made over $4 million, and I was 28 years old, and it was like, you're on top of the world. And I became a genius because everybody in the world was calling me up saying, "Hey, I got this great investment for you. With your money and my brains, we can make more money." And I'm like, why can't we just use my brains? But it's just I'll tell you what, it's the highest highs and the lowest lows.
Yeah,
Highest highs and lowest lows, right? And you got to be able to deal with that fluctuation.
definitely. And that fluctuation, I think, can get pretty wild as well when those higher highs are like you say, $4 million at 28 years old.
Yeah.
And then were there low moments after that, for example, that came?
Well, and that was 87, 88. I made 150 grand because the market dried up. That's the worst thing when you have market crashes and different things when you think of 87 crash, you think about the currency devaluations in the 90s. You think about 2000, the dot-com, right? When liquidity dries up, it's hard, right? And then we used to have like an untold story on the floor, and even anybody, Wall Street people will tell you, when the Democrats are in, it's a party. Everybody's spending money and things are going crazy, right? When Reagan got in and he stabilized the markets, we were all there looking at ourselves because there was no volatility, right? So, we want if you're day trading, you want market chaos. You want the ability. You want liquidity. You want market volatility. That's how you make money.
Definitely.
Yeah.
When you were 28 years old making 4 million, because bear in mind, that's 4 million at that time. Because I did a quick research before I came here.
Yeah.
And then 4 million at that time is essentially, it's almost like a 5x. So essentially it would be like almost 16 to 20 million in today's money.
Yeah.
Which is absolutely insane.
It was insane. I did some good things. I bought memberships. I bought real estate. I did things like that. We used to have this funny saying in the pit, right? All the guys, we were single too. You're single guys. I go, yeah, the first year I made $4 million. I spent $2 million on booze and girls. The second $2 million, I just, blew it foolishly.
Man, I guess when you're making money like that, even though it's not like, let's say easy, but it's like, it could feel, I imagine, like in thin air in a sense, because you're not actually seeing it, but you're trading it.
Yeah.
It must feel like that. It must feel so easy then to...
Very euphoric.
Yeah.
Very euphoric. But, and the key to that is staying grounded, right? If you don't stay grounded, a lot of guys I saw went down deep rabbit holes with drugs and things like that. Fortunately, I didn't have any of those habits, like booze, drugs. I didn't have any of that. Always kind of stayed grounded, kept my physical body in shape and things like that. So I could, I don't know if anybody who's ever played any organized sports, especially at a higher level, right? There's practice day and then there's game day, right? And then there's even practice intensity, but because you're trying to duplicate what it's going to be like on game day, but it's not game day, right? So when you're a trader, it's game day every day, right? And if you don't learn to control those emotions and do the things, the physical stuff, those the endorphins that are released, good and bad, are going to get you. The flight and flee is in constant play. That flight and flee response, which will do, like towards the end of my career, I would just pull in the building and get tension headaches.
Really?
Yeah. So that's a real stress. It puts a real toll on your body. So.
And one thing I was going to ask you actually in regards to that, and going back just quickly before we get into that, was more so into, what was the mindset like for a lot of traders? Because you went past obviously 87 and 88, you continued to trade.
Right.
But I can imagine there were traders who were in that euphoric feeling, making the say millions of dollars, tens of millions, obviously in today's money, for example. Yeah. Then the next year, it's all dried up. The whole market's changed. And they won't be able to then progress beyond that point.
Well, there's a sad commentary on that, right? Because the reason I left is that towards the late 90s, all these electronic markets opened up. In fact, I remember I was in Jack Sanders' office when they announced the launch of 24/7 trading, which at the time it was going to be called PMT, which was post-market trading. We all laughed at it. We didn't know what it was, but I did. And Jack said, "What do you think about this?" I go, "What do I think about what? That you're going to do 24/7 trading on a computer at night?" He goes, "Yeah." I go, "How long is it before it takes over the pits?" Right? I knew right there as soon as it became electronic, then we were we were going to be eliminated.
Yeah.
Well, now that was like early 90s, right? It took 10, 13 years,
Mm-hmm.
15 years. I think there's only now one pits left there, and they are the option pits. And then the option pits are the only thing where you can't totally electronic because you got to execute different strike prices at once. So only brokers can do it. But I saw the writing on the wall in like the late 90s. And in my book, I said that we're going to be gone. I predicted two things. Floor traders would be gone, and the board and the Merc and the board were going to merge. And it did. I mean, literally, what happened when we lost our edge in the S&P Pit, it's half the order flow was going into the E-minis. So that we didn't have 100% pure information on order flow because some of it was on the screen, some of it was in the pit.
How'd that make you feel at the time? So seeing and forecasting in the future of like essentially everything that my edge and everything that I'm doing and have built so far is going to be fading away.
Yeah. So anxious. So I did a couple things. I don't know how far you got in the documentary, but one of the things I did was I started a company with two people, Jerry Putnam and this guy, and Margaret and Stuart Townsend. And we started the first NASDAQ stock trading room in Chicago, which was going to be what's called the So's Bandits, which is very well documented now. We went to a 9-year litigation. Behind my back, when we were partners, they started Archipelago. And then Archipelago became, and let's see, we started the company in 1996. In 1997 or 1998, we had a dispute. I sued them and said, "Look, just give me my information. Just give me show me how much money I make, what this is, so on." They never disclosed Archipelago to me. So then Goldman Sachs bought Archipelago, as everybody knows, and then Archipelago became ArcaX, and they merged with the New York Stock Exchange within a 10-year period. I sued Jerry Putnam and Margaret. I sued Archipelago, Goldman Sachs. I sued them all. It was a 9-year litigation. I won a fraud case against my ex-partners. Archipelago was thrown out of the case. But I literally get to sit here and tell people I started a company, became the New York Stock Exchange, right? So I literally, the one thing that was great about being a trader is that you have a knack, you understand the fast business economics, right? Because you got to buy low, sell high, or sell high and buy low, right? So you got to take that mindset and put it into other things. I always kind of felt that, I found the exchange, and I used to say, I hope this lasts 5 years. I hope this lasts 5 years. So I did other things that I thought would, I had some good instincts on. And so the electronic trading was the one thing that I started preparing for. And I was right. It just didn't make any money on it. Yeah.
And going back towards obviously when you mentioned about keeping yourself in shape, game day every single day. What was the mindset in doing that? Because as we discussed, like other people, they would make the money and they would find themselves vices, and then they would end up in a pit, of their own.
Yeah.
What was it that allowed you to be different?
I think my sense of family. My kids, and my wife meant everything to me. We were literally, I had a home up in Lake Geneva, Wisconsin, which is sort of like our Hamptons, I had a private plane, a twin engine, was it a Baron, twin engine Baron. My wife would move up there with the kids. I would fly into Meigs Field every day, 18-minute flight, work for a couple hours, fly back to Wisconsin, be with my kids on the boat, tubing, skiing. So I knew what kind of lifestyle I had generated
Mhm.
and what it's going to take to maintain that lifestyle. And if I was one of these guys that was seated to, which just had lot of bad habits, that only not didn't affect me. It affected all the people in my life. So I guess a sense of purpose, family, being, the breadwinner, the supporter, my wife did not work, and, I, didn't want her to work. Right.
Yeah.
She raised 7 kids, did a great job. All our kids are productive, and it's, mainly because of her.
Yeah.
For sure. But I think that, it's easy. I used to call it the humbling effect, right? So I had a brand new Mercedes.
Mhm.
I'm driving down the street. I stop at the stoplight and I look over and there's a guy in a brand new Rolls Royce, and I'm going, what is that guy doing better than me? Right? So, it's like every time you think you're good, you're going to find somebody better,
Yeah.
right? So if you don't keep that sort of mindset,
Mhm.
you lose your head and your ass follows, right? That's
Yeah.
what they tell you. So I'm not saying that I do as, a robot. I made my fair share of mistakes,
Mhm.
but you learn from them.
Definitely. And would you say as well that obviously making all this money, especially in the fashion that we've described in terms of basically out of thin air and it's very euphoric, did you ever find yourself chasing money, not in terms of trading wise, just generally in terms of like, I need to be richer? As you just gave an example there, like you're in the Mercedes, there's a Rolls Royce.
Yeah.
Did you ever find yourself in that sort of notion of like, the more money I make, the more happier I'll be, the more I'll be respected, et cetera, et cetera?
Well, I mean, that presupposes that what you were doing had to do with making money.
Mhm.
So I say this all the time. When I was trading, it was more about me competing with you, me competing against the market, me competing with the other guys in the pit, right?
Mhm.
And buying and selling. And at the end of the day, there was a profit. I wanted to be the best I wanted to be in there, and the byproduct was money.
Mhm.
But if you're going to be in that environment, being the master of that environment, being able to be constantly more right than you are wrong, that's a challenge, right? So I always looked at the challenge of how do I become the best today? I want to be the better myself. And some days it meant more money. Some days it meant I didn't lose any money, right?
Mhm.
So I was more about the process, right, than I was about the money it was making. And yeah, do you want to make more money? Well, then you kind of, you got to understand that I was making money on 100% of my efforts,
Mhm.
which becomes a very hard thing to do day in and day out, right? So I did other things where I backed traders and I took a percentage of their winners, and I started the trading company. I started a website called teachtrade.com, and I was on CNBC, twice a week and so on. Within months, I had 30,000 people on my website,
Wow.
right? And I tell this story all the time because it's very, very, you want to talk about your retail traders, right? So we did everything on this website. One of the things that we did was that we had, introduction to what do you call it? Financial analysis, or like charting. We had charting, and so we were teaching people how to become, how to do your basic charting, right? Buy points, sell points, so on, right? Then we had the 10 commandments of trading. Then we had, here's the difference of all the brokerage firms, right? So it was more of an education site for retail traders. What we did is that we would put a morning comment out about the S&P futures, Dow futures, right? And so we would do all that. And then we'd do a midday comment, and then we'd do a closing comment, right? And then we would have a story, like a pit story, from the stories from the pits. Well, when I did the web trend thing, so this is 1996, I was absolutely enamored and floored by the power of the internet. I was looking at this thing and going, I'm getting 1 million impressions a day. I got 20,000 people on my website. And when you do analysis of a web trend, it tells you where people go and spend their time.
Mhm.
Where do you think they were going, spending all their time? Introduction to technical analysis.
Mhm.
Oh, another thing I did, was kind of clever on my part, was my wife had a book, like Esquire magazine, or
Yeah.
Glamour,
Mhm.
and if you read it, is your husband a good lover, right? They'd have all these questions, right? So what I did is I went to the University of Chicago, hooked up with this psychiatrist, or the guy who was a sociologist. I go, here's all the traits it takes to be a good trader. Make me a quiz.
Wow.
I want to see if you got a personality trait. Of course, at the end, everybody had a personality trait, right? So, but what I did, here are the 20 questions to take the quiz. You had to give me all your information.
Mhm.
What's your name? Where do you live? How much money do you make? What education are you at? Do you have a trading account? So I was building a database. I didn't even know it was going to be valuable,
Mhm.
right? So when we did the web trend, everybody, like I said, where do you think they were going? Were they going introduction to technical analysis? They took the quiz. Where did they go? We're going to the commentary.
Yeah.
They were spending most of their time on what I thought the market was going to do, what I said midday, and what I said at the end of the day. So I have this little paradox I tell people all the time. You walk into, your best friend walks up to you and says, I've been doing all this charting, and I think that this company is going to go from $20 to $40 in the next 6 months. You should be all in and buy it. And you look at him and say, wow, that's great. I'm glad you've done that work, and it's really, you've done all this work and back testing and all these things. He goes, yeah. The next day, one of your other friends goes up and says, hey, I know the CEO and the CFO of this company.
Mhm.
They're telling me that this is going from 20 to 40. You're going to buy that 20 to 40 from the guy who said he has inside information versus trying to do the work yourself. Think about that.
Yeah.
Right? It's typical of everybody, people that want to shortcut the system. And this is the really things I look at when you're talking about your retail traders, right? If you're going to be retail traders, you need to learn this to do it yourself. So what we did, we started expanding our market commentary, or every 15 minutes, right? And I met this gentleman out of Houston, Texas, who worked for Baker Hughes. And he was building trading systems, but he was a computer scientist, right? And he calls me up, he says, hey, would you trade this system for me? I go, yeah. He goes, if I give you the system, will you trade it? And, I can make some profits. I go, I'll tell you what, give me the system and I'll trade it for you. And within 6 months, in about 3 months, I made him about 300 grand trading the system. I made a profit for him, and then I had my own, right? And then we started developing a relationship. And he said to me in 1996, he goes, Lewis, what do you want me to do? I'll take over your website, make sure that it's, what do you want it to do? And I said, what I want is I want to be able to type our information in. And when we say it, when we put it into the website, it pops up on their screen. He says to me, yeah, there's this new thing called Java. I'm an expert at Java language. And in 48 hours, he created a pop-up window so that if you left us minimized, as soon as we typed in somebody, hey, the market's doing this, blah, 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 you could read it and then minimize it. That created a market of, I had 6,000 people using my site for 6 hours a day.
Wow. And
then I decided, well, how are you going to monetize this? So I went around to all the, commodity future merchants, commodity future merchants, SVMs, right? So I went to all the different ones that had retail business and said, hey, why don't you sponsor my pop-up? Sponsored by, Goldman Sachs, sponsored by, R.J. O'Brien, sponsored by whatever. And then they'd have my commentary, and then they could get those people to clear them because that was their business, is getting people to clear. Nobody understood what I was doing in 1996. I like to say I invented Twitter, but what are you going to do? Right? I was literally doing pop-up stuff in 1996. And so that failed, meaning they didn't want it. And so I went to Michael Bloomberg and showed him our traction and said, I want to give this away for free on the Bloomberg terminal for 6 months. He goes, I'll give you 30 days. And so we did it for 30 days. And then at the end of 30 days, we had 30 hedge funds paying us $300 a month for the service.
Wow.
So I kind of got off topic, but at the end of the day, people would rather hear from the experts than do the work themselves,
100%. Yeah.
right? So beware, right? When I used to go to the trading shows, I used to be out there and I would laugh. I go, did you guys, everybody find the Holy Grail while you're here? They'd all start laughing. I go, you want to know why there's no Holy Grail? I said, because if you had something to let you make money every day, would you share it with people? What would you sell it for? Right? It's so, yeah, it's, the trading world is, what have you done for me lately? I got done after a 20-year, very, very successful career, very well known. And I couldn't walk into Goldman Sachs and say, hey, give me a job making $500,000 a year and I'll tell you everything I know. Right? They just want to see what your last trading was. So the trading system is, the trading world is very efficient. Losers win losers, fade out and the winners keep going.
And it's fascinating what you said there, because I was actually going to ask you about that, but then you expanded it anyway, which was in terms of the process. You were saying how you focused on the process. It wasn't about the money. As a byproduct of focusing on that process, the money ended up being there. And I think that's so important to highlight because, as you've mentioned, that everyone is looking for the commentary, everyone's looking for the signal, everyone's looking for the fast route, the fast pass, the holy grail. Nowadays, it's the hack, whatever the trading hack is that allows them to be successful overnight. And I think it's so important to really highlight that. And for someone obvious, from where you're positioned, for people to listen from someone like yourself is so important for them to start focusing on that process on multiple levels as well, because it is still, unfortunately, and it shows really how interesting it is. Like, even though technology, the markets, everything has changed and evolved over the last 40 plus years, people haven't. People haven't. Yeah, they're still showing the same sort of negative traits, the same greed, the same rushing principles, versus you would think by now that everyone's been saying it, or all the successful traders pretty much share the same point of view. Their strategies are different, right? And the way they may say that, you can't scalp. I've had people where they say scalping doesn't work or this doesn't work, and that's fine because that's their opinion, right?
Sure.
But in terms of what it takes to be a profitable trader or successful trader, it's always the same. Yeah, no one listens. Still to this day.
Yeah.
What does that make you feel though, as you've seen that everything evolve, but you see the same thing when it comes to the retail trader or the average trader going through the exact same mistakes?
Yeah. I mean, if you look up the rules that I wrote in 1996, everyone's written rules. They're all my 10 rules. They all have at least 7 of them in the rules, right? And it was just like 20 years of experience saying these are all the things that it took me to mature. These are all the mistakes I made. These are all the shortcuts I tried to make, and so on. And it's like, when I left, I started a couple things. I started a healthcare company, and currently, I'm in. So like, if you're going to be in trading, so when I started the healthcare company, I actually was buying nursing homes and creating CCRCs because I loved the demographics. It was baby boomers retiring. This is 2003. And you just think about how that market has exploded in the last, since 2003. I was buying nursing home beds and assisted living beds for $25,000 to $40,000 a bed. Those beds now go for $250,000 a bed, right? I sold that company, and then what attracted me to it was the demographics. It was going to get bigger, and there were going to be more players. 80% of the market at that time was mom and pop, like where a person owns 3 nursing homes and 2 assisted livings and so on. The big players haven't even entered the market yet, the national chains. But the demographics of the market, I could see that, how there was an opportunity to make money there. Same thing when you're trading. You need to trade things that are liquid. You need to trade things that give you the opportunity to, when you're wrong, it just doesn't sit there, right? So you got to be able to, get into a place when you find liquidity and demand. The more liquidity and demand, the more volatility. The more volatility gives you an opportunity to make money, right? You're not going to you can't make money trading illiquid markets, right? Unless you know something everybody else doesn't know, right? So in 2017, I started a cybersecurity company. A cybersecurity company, great timing. I mean, right now they're saying that's a $2 trillion industry. Venture capital poured 14 billion and created 6,000 companies over the last 5 years. Right? There's so much. There's so much different. Everybody's specialized in cybersecurity. There's just so much demand out there that we hit it at the right time. We went from 2 employees to 120 employees. So, it's the same process, right? Like when I look at my investments and what I do, it's a process, right? Now I'm not a bean counting process. I look at market trends and I look at the size of the market, right? Will it be scalable? Well, those are the kind of things that I learned from trading, right? You just got to have some good instincts, and then you have to kind of pare down the risk, and then you have to execute your plan, right? And so, so if you're going to be a retail trader, it's not something you can just do part time, and you're going to have to put yourself out there, and it's a 24/7 decision process.
I loved what you said just then in terms of the comparison between your trading mind and the experience, and how that's allowed you to go into the outside world in terms of investments and how you look at those and how you sort of can try and predict those trends and that demand and that growth and volatility essentially that you're looking for. How helpful was that in terms of, you've already mentioned, obviously you got that from trading, the plan, the risk.
Yeah.
Would you say that those traits are there, in terms of successful trading really can translate to, I would say, because you've already made the comparison as well previously of, being an athlete and sort of the mindset and discipline that's necessary there and how that translates to trading. Because I've always been of the belief, and I've shared many times, in terms of success is a blueprint, regardless of whether it's trade. Trading has its own nuances and niche as well. But overall, if you want to be successful, being able to take risks, being able to back yourself, being able to notice and pay attention to detail, be disciplined, be hardworking, be switched on essentially 24/7. Like, I feel that that's quite universal, regardless of what you do. What are your thoughts?
Yeah, so I feel kind of lucky because I've never had a job, right? I mean, I worked in high school and college, but literally I came out of college, became a clerk, then just traded for myself for 22 years. Then I started a healthcare company, and I was the owner of the company, right? And then I started the cybersecurity company. I was the owner of the company. So I think that I have a personality type that's not risk adverse. But when I was, I had a bunch of guys from MIT approach me when they got kicked out of Las Vegas for card counting, right? And they came to me and said, "Look, we like to be a trader. Here's what we did at, got kicked out of Las Vegas." And I'm like, I looked at the guys, and they had the right mindset because they were looking to play odds. They were looking to say, when the odds are in my favor, I increase my bet, and so on, right? Then I would have people come. Now, those are kind of the people that I gravitated to. Those are kind of people because they had a market plan, right? So when you're looking at putting on a trade, that's when you want to put your best execution on. Why am I doing it? So on and so forth. But then I would have people come to me and say, I go to Vegas, and if I'm up money, I just keep laying it in. I'm the best gambler there is, and I look at them and go, "Well, you're not going to make it as a trader," right? Because it's not gambling. It's called risk return, right? And that's why there's so many different strategies out there now. Like, look, people are making money doing cover calls, right? Buying ETFs and then trading the options around them, right? And everybody's just looking, with all these new products that have been invented, becomes inefficiencies. And everybody's just looking, how do I can take advantage of those inefficiencies? So there's a lot of opportunity out there, and there's a lot of things going on that you have to conceptualize today as a trader. And, it's just like, starting a business. You just got to find your niche and then try to, play within that niche and make the right decisions.
Going back into your career, there was a moment, I know there's like a very famous trade. I don't know if it was your largest trade.
Yeah.
But I think it was during the crash in 87, right?
Yeah.
And I think you made over $1 million or $1.5 million in a matter of seconds.
Right.
Can you break that down for us?
Yeah. So it was the week prior to the crash, that Wednesday, Thursday, Friday, markets were extremely volatile. And I made like 300,000 so far for the week. But I had already planned to go to Europe with a bunch of guys that were friends of mine that were older. They're all about 10 years older than me. But I met them at the country club, was playing golf, and I'd never been to Europe. So they said, come on, we're going to go to Italy. We're going to go to Switzerland. We're going to go here, right? So we get on the plane, but when I was getting to the plane, I had a 20 lot position on when I left the market because I went in the morning, and I called my clerks on the floor and I said, hey, what's going on? She goes, the market's almost limit down. She goes, you're up about 200,000 on that position. I go, really? She goes, yeah. I go, get me out. Make sure you get me out. I said, because Monday, I think there's going to be a big bounce on the way up. So we go to Europe. We leave that Friday. My friends go, everything okay? I go, yeah, I'm going to have a good time. I just made 200 grand. We're going to have some fun out there. So we get to Europe. We're in Italy. Saturday, Sunday, we end up in Lausanne, Switzerland. And I checked into the Boulevard Hotel, drove down, took a cab into the city, and I was sitting in Piaget. And as I was sitting in Piaget, I'm looking out the window, and I could see the ticker tape. I think it was the Swiss Bank building at the time. And it said the New York, or the Dow was down 500. And I go, hey, there's something wrong with that ticker tape, right? Now you got to remember, this is 1987. If the Dow moved 25 points, it was a big deal. The high of the Dow was 3,500, okay? And now it was down 500 points in a day. And this is before any circuit breakers, anything that was, put in the market. No one ever thought a market could go down that much.
Yeah.
Literally, from Thursday to the Monday morning, it was down 50%.
Wow.
Right? So what's the Dow at now? How was it? I don't even know what it's at right now.
He's like over 30,000.
Yeah, 30,000. Right? So
something.
imagine you wake up next tomorrow, it's at 15,000. People are going to be jumping out, right? And so, I walk. I tell the clerk, I go, I'm not buying that watch. I was buying a watch for my wife to kind of smooth things over because I went to Italy with a bunch of guys, And so when I get back to the room, my brother's on the phone, my wife's on the phone, left me a message, you got to come, this market's crazy. I don't think this place is going to be here anymore. They threw all, half the people out of the pit. They couldn't trade anymore. So I had to get back. It was funny because I had left with a position on, I was long 1,000 euro dollar calls at 94. And they went into the cabinet. So they were worthless, basically. And the mark was like 91.5. Okay. So I start calling around, and the only thing I could do to get back fast was fly to London, get on the Concorde, fly to New York, and from New York, get to the trading floor. So that's what I did. I had to pay $15,000 for one way back in 1987 on the Concorde, right?
How much that would be in today's money? Like nearly 100 grand.
Yeah. So I friggin' go home. I get on the floor, and my Eurodollar calls, right? I walk on the trading floor at noon on Tuesday. So my Eurodollar calls on that Monday morning opened up at 94.5. Or on Tuesday morning, they opened up at 94.5, which means they were in the money. I was on a plane. I couldn't call anybody to do anything, right? So when I walk on the floor, the options, I had like a $300,000 profit on the options. So I took the profit on the options. But if I was there when it opened, I could have sold the 1,000 at 94.5 because I was long. I had the right to be long at 94, and I would have had like what they call a synthetic put on. Then what happened then was the market went back to 92. So that was worth like a $2 million trade, but I couldn't execute the trade because I wasn't on the floor. So I took the profits in there, and then it was Tuesday afternoon. I made about 200 grand just trading in the S&P Pit. But the funny thing was everybody, like used to be like 400 people in the pit. There was only 200 people in the pit.
Yeah.
A lot of the order fillers were taken out of the pit because nobody wanted to risk because the market was going up and down so fast. They didn't want out trades. They want this. They didn't want that. Like a lot of guys didn't have enough money in their account. The clearing firms were taking them out of the pit.
Mhm.
So I walk in on that Tuesday afternoon. I make like 200,000, 300 grand. And then Wednesday morning, I do the same thing. I make another 200,000. Then Thursday morning is the famous trade. And what happens is I walk into the pit and the Shearson broker comes in and he's going, he's looking at me, he goes, what are you doing? I go, what are you doing? He goes, I'm a seller. I go, well, I'm a seller too. Right. And he goes, well, I'm 1,000 lower. I go, I'm 2,000 lower. He goes, well, I'm 3,000 lower. I'm 4,000 lower. And the market opens up like 5,000 lower. And I went to go buy his trade. And the guy behind me tackled me and said, hey, I'll sell you 300. I go, where? He goes, I don't care. The low. You can have the low. And so now I'm long 300 S&P, and the market's not moving like 5, 10, 15. It's moving 300, 500, 1,000, like literally. And I got 300 contracts on, right? So I catch the broker on the other side. I go, what are you doing? He goes, I'm a buyer. I go, sold. And I made a bunch of other trades. I handed my cards to my clerk, and I said, go figure out where I'm at. She came back like 15 minutes later. She goes, I think you made $1.5 million. I go, what? She goes, you made $1.5 million. I just literally walked out of the pit, went in the bathroom, and threw up. I was like, and it wasn't because of the euphoria of making the money. When I had bought that 300, it was total silence. Like the market had kept going. It could have went to zero. Who knew, right? I could have lost everything I worked for up to then. But I didn't, and it's been recorded as one of the top 10 trades ever made. So
That's incredible.
Yeah.
That's absolutely incredible.
literally in 13 seconds.
Yeah.
And really, and that was ended up being the famous George Soros mistake. He used to clear all his trades through Shearson. He didn't to this day. So until they went out of business, but they put the order in backwards twice. So
Really?
they were supposed to sell 2,500. They sold 5,000.
Wow.
Then they had to get out of 2,500. So the market was crazy. Like I said, when the world's melting, just stay cool, right?
It's absolutely insane. Because even at 1.5 million in a matter of seconds, but in today's money, probably 5-6 million.
Yeah.
In a matter of seconds. And as you say, you threw up because it could have been the opposite. It could have gone the complete other way.
Yeah.
And therefore it completely wiped you out. What was it in that moment that made you make that call?
I was just doing what I do, right? I mean, 5,000 lower on an opening was a little oversold to me, right? But, who knows what could have, we didn't know that was a double order put in that caused everything to open up that low. What if there was really a world catastrophic event that was really costing, the issue, when they did all the investigation after the crash of 87, they tried to point the finger at the futures pit as the tail that was wagging the dog, because all these people that were long stocks, instead of selling their stock position out, they were hedging in the futures market. So it was literally letting them, offset their physical stock positions, and there were no circuit breakers involved yet, right? Like, so, at the New York Stock Exchange, if you were a market maker, you could close a stock if it was falling too fast, right? We didn't have any of that stuff in. So, afterwards there was a big, the CFTC and SEC, and I was actually on the committee that did the study of what caused the crash and things like that. But it's just a matter of market maturing and learning how to, safeguard the things, right? It was funny because I was sitting in that was an event that changed my frame of reference on the world. I'm sitting in Jack Sander, who's the chairman of the exchange at the time, and I had about $4 million sitting in my trading account, and I go, hey, I got to get a check for like $3 million. He goes, I can't give you a check. I go, why? He goes, we can't make our margin calls. And then literally his secretary goes, hey, Jack, I got Alan Greenspan on the phone for you. And I'm on the speakerphone listening. And he says, don't worry, Jack. We're gonna free up the money supply. We're gonna make sure everybody's good. Right? So it was the first time, 28 years old, I'm taking a look at who is this Federal Reserve? Why are they doing this? How do they operate? Right? This is then I, this is a private group of banks. This has nothing to do with the government. And so kind of I became more, in tune with the way the markets work. Like the first thing I thought about was, I wish there was electronic trading so I could have traded the bonds. Because I heard the chairman of the Federal Reserve say he's going to loosen up the money supply. Right? That means if rates are going down. So
what's it like in terms of having the edge in the pit? As you said, like when you made that trade, you're seeing the panic, you're feeling like it's oversold. Like, was there a strong sense of edge just being in the pit and reading the emotions in the room and in the environment?
Well, the edge was that I was the biggest trader, so people had the biggest auras. I can see what they were doing, right? So, as being the biggest trader, people didn't care. What was happening in those days, the days of the crash and the days after, all they cared about was price, was buy, sell. Price was. We figured that out later. They just wanted to make sure you were selling, I was buying. We didn't have an out trade. So it was literally, there were 4 different markets being traded in that pit. Like there was 300 guys. It could be $20 over here and $15 on the other side of the pit, but they didn't care because the world was panicking.
Yeah.
I mean, think about that. I mean, if we woke up tomorrow and the Dow was at 15,000, the world would be in a massive meltdown.
100%. Because there's a lot of talk, to be fair. I know obviously during COVID we had quite a strong rally, but a decline, then a strong rally thereafter.
Yeah.
Completely, and then now all-time highs.
I literally wrote a thing on my LinkedIn about the COVID and told people not to panic. Here's all the things I've experienced, right? Market's going to come back. And that got about 20,000 views. I got like 6,000 people who follow me on LinkedIn, but I basically said, listen, COVID, this is something we've never seen, but at the end of the day, it's going to work its way through. The markets will, come back. So yeah, I've never seen anything that we haven't been able to come back from. I've seen a lot of different things, including the Michael Milliken scandals, insider trading scandals. The two constants that happen in trading that is, at the end of the day, when there's a scandal, it's either inside information, right, or a Ponzi scheme. The two things have never changed over the last, since 1980, right? So even the Madoff thing, I knew Madoff. I had a fund that I started and I was in Bermuda, and I knew people that had money with them. And I said, why don't you give me some money? He goes, look, this guy's made me 1% a year for the last 5 years, no drawdowns. And I looked at him, I go, that's not possible. He goes, what do you mean? I go, it's not possible. I go, so I'm one of the best traders ever. I go, and I have drawdowns, right? So, but people didn't want to believe, right? And, if it looks like a duck, walks like a duck, and quacks like a duck, it's a duck, right? So there's no way to ever be putting money at risk and capital that you can't have a drawdown. It just doesn't happen.
It's interesting you say that, because the majority of retail traders, I say majority, I kind of accidentally say majority quite often, but there's a lot of retail traders who are on the hunt, as we talked about before, about a holy grail. They're searching for something that allows them to predict the market tick for tick, point for point, looking for something that doesn't have drawdowns, just profitable, multiple, say tens of % per month sort of returns. That's the strategy they're hunting for. I've seen traders where they had a profitable edge, where they worked it as well, and got disciplined, had a plan, 3-4 months, they're showing good returns. It could be 3-4% a month, right? Not saying that there won't be drawdowns, but like for that period of time, whilst they were learning, they showed a good edge. But then they drop that edge to go learn something else because they're hunting for something that allows them to predict. What are your thoughts on that when you hear something like that?
Well, I mean, so listen, no one can pick bottoms, no one can pick tops, all right? If you do pick a bottom and pick a top, just chalk it up to luck. You're not a genius, okay? So the key to trading is is literally following the money flow, right? Guys, people I deal with now, we've talked about different trading strategies. It's about beating the money flows. Like, money flows, out of chip stocks into the healthcare stocks, or from out of healthcare stocks into railroad stocks, because everybody wants to be market neutral, or that's why they have some paying a dividend. So the key now is getting a strategy that gets in front of the money flow. When the institutions are going from one vertical to another, trying to time that movement with the mass amount of money that they're putting into it, that's the only ways you're going to make money. You just want to get on the ride, especially if you're only a technical analysis trader. Like if you're a fundamental trader, you may be able to create a basket of stock that's not correlated to the S&Ps. That's very successful for you. But it's going to take a lot of testing, back testing, doing all those things. So, to this day, it's still about beating the money flows. You want to be on the trend. The trend is your friend, right? So, to think that you could pick a bottom and pick a top, if that happens, like I said, it was luck. It's not something you can do all the time.
So it's essentially not just pick a trend in terms of what the market's showing, let's say bullish or bearish, but also where people are putting the money, where the large portion of the money is flowing into, trying to observe and understand where that's going to be ahead of time, position yourself accordingly, or at least recognize when that's starting to shift and position yourself accordingly. And regardless of what that edge looks like, as long as you're doing that.
I'll give you like an example. All right. How that thought process, okay, can transcend. So when I got into the cybersecurity business, well, I first heard about Bitcoin, it was at like $300, $400. I went to a Bitcoin convention in Las Vegas. Saw a bunch of old traders, a bunch of guys coming up to me, hey, ain't you Lewis Borsellino, blah, blah. And I'm trying to look at Bitcoin now. This is 2017. And I'm looking at Bitcoin going, how could somebody tell me they're a Bitcoin trader? All you could do is buy it, right? So you really can't get shorted. All you could do is buy it. So I'm looking in 2017 towards probably the spring of, 2018, the spring of 2018. Bitcoin went from $1,000 to $2,000. And I'm going, wow, I can't believe that it jumped up like that. First of all, it went from 400 to 1,000, right? And everybody's talking, the euphoria around cryptocurrencies. And I'm going, well, why would this jump in a matter of 3 weeks, double in price? And then what came out was the WannaCry virus, where 150 countries, people got hacked and they were encrypted. And all of a sudden, the people had to pay their ransoms in Bitcoin. And I'm going, this is interesting, right? I'm in cybersecurity. I see this hack go, and all of a sudden I see the price of Bitcoin go up. But the price of Bitcoin went up before they announced the WannaCry virus had hacked everybody. So that means the people that were encrypted had to go and buy Bitcoin to pay the ransoms to the people that encrypted them. Then I'm watching it, and then it went from 2,000 to 4,000 in the fall. What do you think happened then? Equifax, right? So the Equifax breach happened. 150 million American credentials were released on the dark web. So when I got into the cybersecurity company, I really got into the dark web. Started spending hours and hours and hours on the dark web, and really understanding how it functioned. And so what it really functioned as is it's a marketplace for illegal activity, right? And so now I'm thinking, well, now the WannaCry was gone, then Equifax came out, it doubled again. So I basically wrote a LinkedIn article that said, Bitcoin price is a leading economic indicator for cybercrime, right? So, and then I said, it's at 2,000, it's at 4,000. I go there, and the reason, they had to find, and then what would happen, and it was, you're going to see all those people on the dark web that were buying the data, they were starting to sell it to people, like databases, credentials, and so on. And then the CME announced that they were going to literally release futures on Bitcoins.
Mhm.
So as soon as they did that, then I said, now you can trade them. You literally have a way to get short Bitcoin, right? Now the margins weren't very conducive for trading. They were very large, like 50% margins or whatever at the point. But I wrote an article that said, I think Bitcoin, now that the futures are coming out, are going to go from 4,000 to 10,000. After 10,000, I really don't have a market call, but the expansion of Bitcoin not only happened with speculation, but it was also what was going on for cybercrime,
Mhm.
right? So, you know, I got a little bit off topic, but there was a reason for the price. You know, people come to me, what do you think of Bitcoin? I go, as long as there's cybercrime, you're going to need Bitcoin,
Mhm.
right? So that was, you know, a market trend that I found, you know, quickly,
Mhm.
right? And when we used to tell our clients, we still tell our clients, you know, watch the fluctuation of Bitcoin when it comes to that, because it's still the way that people pay their ransoms.
No, it's not changing. And cybercrime's only going to be on the rise the way that we're going.
It's a $2 trillion industry
Mhm.
right now.
Wow. Well, crypto right now, crypto is a very hot topic. You know, it has been for a very long time and probably will continue to be as it expands. We're seeing a lot of ETFs now with
Yeah.
Bitcoin, with Ethereum. We're coming towards the end segment of the podcast. There was one thing that you've said previously, which was everyone's always trying to hit a home run. And you say that really every trader should be trying to hit singles.
Yeah, I could tell you that from all the years that I stood in that pit, it was the singles at the end of the week, right? I used to tell it was funny, we were talking about if you lose control of, you know, of the value of a dollar, right?
Mhm.
I used to ask my secretary, I go, how much are the bills for the month? 50,000. All right, I'll be back. And go down to the floor and make 50,000. Tell her to pay the bills. I mean, it was like an ATM machine for me. But yeah, everyone, because I was such a big trader, thought I was always swinging for the fences. I had a goal. If I, you know, if it was the market went off at 8:30, by 9:30, if I was up 5,000 or more, I left. Right?
Mhm.
I didn't want to stay there, you know, because you know, many a times I did that and lost what I made. Right? So it's just about taking what the market
Mhm.
gives you, right? And then when those big days come, you just, you know, you're ready for them. But it's not because you're swinging for the fences. It's because the market opportunity at the time allowed you to put a bigger position on that was more volatile and generated more money.
Yeah.
Same strategy, just more volatility, more volume.
Do you feel like you ever miss the chaos, the organized chaos?
Now
Yeah.
I miss the money. No, I miss the fast money, right? Like I said, I used to look at my clerk and say, "What's the bills? 50,000. All right, I'll be back." You know, I mean, you want to have a jaded, not jaded, but you want to have a distorted look on life, right? I was having lunch with Maury one day, and I don't know, breakfast, and it was like, I don't know, $15 a bill was, right? And I gave the girl like all I had was like a 20, you know, and I gave her a 20 and another 5, and he goes, "You just gave her a $10 tip on a $15 bill." I go, "Yeah, so what? She works hard." He goes, "Don't ever lose track of money, right? Don't lose perspective of money." But it's kind of hard, very, very hard when you know, there was a bunch of guys in their 20s driving around in Porsches and Mercedes, Ferraris, single, you know, in both cities, both New York and Chicago, you know, they said women used to look at you know, I got to marry a doctor, a lawyer. I like to find a very nice, respectable professional. All of a sudden, they saw these young kids driving around in Porsches and in their 20s. Everybody wanted to marry a commodity trader. We had our choice, you know. We had our pick of the litter, I guess.
In terms of your advice to traders, as we've discussed, we've already given so much. Like, I know there's going to be so much taken away from this episode already, but what would be your direct advice to traders of this generation, right? We've already summarized that majority of people, regardless of how much the markets have evolved and how much they are told, you know, these are the mistakes or these are the things that need to be done, but there's still the same mistake seems to be being made. So what would you say to the audience in terms of like, how can they focus on progressing as a trader and start to make steps forward?
Yeah. So, I mean, you got to have your process. You got to have discipline. You got to stick to it. But you have to trade markets that are going to give you the opportunity, right? Like I said, when Reagan was in, the markets were, very mundane and slow and sort of, didn't have much market movement. So if you're a day trader, you need that. So you need to understand if you're going to be a retail day trader, you have to trade markets that are volatile and give you the opportunity to make money both on the down and the up. If you don't do that, you'll get yourself in a trade. You'll get stopped out of the trade, and then the market just sits there, and there you are sitting with a loser. So you gotta be able to look at things that are giving you opportunity, right? If you can't find something that's volatile enough to give you opportunities both on the up and the down, it's going to be very difficult. You're going to be a position trader then. You're just literally going to, I'm going to buy the S&P 500 and I'm, put a stop in and I'll just stay long, or I'm going to buy this stock or whatever. When stock traders, completely different animal when it comes to futures trading. But you gotta play in a game that's going to give you the opportunity to make the most amount of money.
I love that. Well, Lewis, I really appreciate your time today, sharing everything with us. It's like I said, a true honor to be with you and to have you on the podcast as well. And hopefully, maybe, fingers crossed, we can have you again for a part 2 in the future.
Yeah.
But everyone at home, drop a comment of your biggest takeaway from this episode. Obviously, there'll be links for Lewis in the description below. And yeah, drop a comment, there'll be other episodes on screen, so make sure you check them out. And until next time, take care.